Dear viewers, welcome to this episode of Expert Speaks. In India, there is a lot of buzz around the manufacturing sector. Everybody is talking about investing in the manufacturing sectors. Companies are rolling out schemes after schemes which are focused on the manufacturing sectors. There is a huge amount of FDIs which is coming into India. There is a news every day in the newspapers talking about the developments which are happening in the manufacturing sector. To know what exactly is happening in the Indian manufacturing sector, what are the opportunities it is creating, what are the things which you must be knowing before you invest into the Indian manufacturing sector, I am going to ask in this episode to Expert of the Week, Fund Manager Shreyas Devalkar. Stay till the end of the video. It's an interesting conversation. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, I have invited Expert of the Week, Fund Manager Mr. Shreyas Devalkar for this episode to talk about the manufacturing sector. Mr. Shreyas Devalkar has been the head of equities at Axis Mutual Fund. He has a rich experience of working in the equity sector, and he has a combined experience of more than 2 decades. Prior to assuming the role of head of equities in Axis Mutual Fund, he has discharged duties in various capacities in various institutes. He has been a senior fund manager at Axis Mutual Fund since 2016. Prior to that, he has been an equity fund manager at BNP Paribas. He has also discharged his duties in institutions like IDFC Securities and JP Morgan. Welcome to this episode, Mr. Shreyas Devalkar.
Thank you very much. Thank you for inviting on your show.
Mr. Shreyas, there has been a lot of noise in the newspapers, internet, television, everything about the manufacturing sector in India, and people say it's a big opportunity, it's a decadal theme, and all these things. Why everybody is talking about manufacturing sector? You have been a fund manager and you know the inside of this sector. Why everybody is talking about manufacturing sector today?
So manufacturing sector is a need of an So it has been always need, but definitely it's really a need now. So from 2 aspects. One is it all started from Make in India way back a decade ago almost now. And that actually it started from the perspective of import substitution, because our import bill in some of the manufacturing items is increasing a lot, especially electronics items. So it started with that various policy push government gave during that time. It was in form of PLIs to actually tax rate cut also was the step in that direction, that many people can start companies in India. However, its real impact was seen post-COVID, and there was definitely change in the geopolitical alignment globally, and because of that, the Make in India or China Plus One, both these things started working out for us. And so along with the policy measures which we took last decade or so, and then this international pull towards us because of China Plus One as such. So multiple things playing out together now. And that's where you are hearing a lot of action as well as a lot of talks around it in media.
See, in any country's economic journey, it is said that first it's the agrarian economy which is prominent. Then they slowly move towards manufacturing. And then in the third stage, it is said that the service sector will take over. India has been in a very peculiar situation. From an agrarian economy, it didn't pass through the manufacturing sector to such a vibrant level, but the service sector literally took over somewhere in the late 90s to the early 2000s. Do you mean to say this push towards the manufacturing sector today, is it an attempt to bridge this gap which was left as a void in the economic journey of India?
Yeah, definitely. So it's a manufacturing sector especially. So as we know, for any industry, what is required? So it is land, labor, and capital, right? 3 things are required. And though we talk about these 3 things, but it is mostly about, so we have a land, we have labor, and there is no capital issue. as such. However, in manufacturing, more so, apart from all this thing, the overall infrastructure of the country is also important. And in that context, if we look at the China's growth in last 30, 40 years as such in this segment. So they have done wonders in terms of infrastructure, investment, development, and working at scale. During that time, definitely with our age, so India's age has been about educated manpower, English-speaking manpower, and we have definitely played on our age, and that's where in services sector we have actually we are one of the largest exporters when it comes to services sector. As far as manufacturing sector, as I said, there are multiple such things. So it is not only about people and availability of labor. It is about everything. And again, in the context of other competing countries for the same kind of job. So because of that, now if we now look at the way we have invested now in infra over last 10, 20 years, as such, and multiple policy initiatives, again, as I was highlighting. And with that, this gap is expected and it has to be breached because manufacturing services sector per se provides a certain type of jobs and it requires certain skill sets, while manufacturing sector require different skill set. So the services sector definitely has benefited section of Indian economy and a section of population when it comes to employment, etc. But manufacturing sector is also all encompassing. It actually can develop the rural part of the economy, and since the skill set required here are different, it also is complementary when it comes to job creation in the economy, and that's where, from all the perspective, manufacturing sector development is really important for broad-based growth of any country. It is also important from being self-reliant perspective when it comes to our balance of payment, because we are not natural resource rich country. We are actually importer of natural resources. So from that point of view, also manufacturing sector's importance is really high. And apart from that, because the increased concerns over geopolitical alignment, all the more important now. All the countries, actually, it's not only India. Many developed countries also are thinking about whether they should be manufacturing their own country. So that is the additional angle. So considering all these three angles, I think the manufacturing sector is essential, and we have to actually head in that direction over next decades.
Let's look at a comparison of India 10 years before and what it is today and what might happen future. What has been the percentage of manufacturing sector in the GDP about 10 years before? Where do we stand and where is it heading in the years ahead?
So as per various estimates from in 10 years ago, the manufacturing share of GDP was around 17%. Then it was around $310 billion. From that, in last decade, it is actually almost flattish. We are still 16% of GDP is manufacturing. I'm talking about the nominal GDP. So in last 10 decade, actually the CAGR growth of manufacturing GDP has been around 6% versus nominal GDP growth of around that level. So the growth in this has not been outpacing the growth of overall GDP. While over next 10 years, again, it is as per various estimates of various experts, it is expected that the next 10 years, the growth will be driven by manufacturing sector. So the percentage contribution of manufacturing to GDP is expected to go to 22% from 16-17% currently, which is a growth CAGR of closer to 13% versus nominal GDP growth CAGR of 10%.
As you can see, why this is there is a stress right now on manufacturing sector. Is it imposed on India because of pandemic? Is it because of China One policy? Is it that the government is proactively working to fill that gap between the service economy and the agrarian economy, that due share of manufacturing to be given? Or is there any other factors which are moving in favor of manufacturing sector right now? What is driving the manufacturing sector?
So there are multiple factors which are playing out. So one should look at what are our strengths and where, though we say that is manufacturing has not picked up, where it has not picked up and where we are actually doing well. So the segments like auto ancillary manufacturing, we have been doing great job there already. Segments like chemical manufacturing, for 3-4 decades we are doing good job here. Then the sectors or segments like capital goods, here it is not as high a contribution what we have, but there we have expertise. So we have expertise in textile actually. Textile, because of cotton production, we have expertise, but not so much in the apparel. We have not gone very, very high share. But if you look at in home textiles and all, our market share is very high. Again, thanks to the cotton producing, we are one of the large cotton producing country. So because of various reasons, now if you go segment by segment of manufacturing, some segments where we are already advanced, some segments we can compare us as good as China. In some segments, obviously we are versus other competing countries. So if we look at various sub-segments of this manufacturing, then India has expertise, both from promoter point of view, as well as from the skill set point of view for various decades. So in chemical industry, 3-4-5 decades of expertise we have. Auto, again, 3-4 decades of expertise. Pharmaceutical sector, again, we are one of the largest tablet manufacturers, especially for US. That is also manufacturing that we have achieved. But there are certain segments where probably we are not as big. So it can be capital goods engineering, it can be defense related manufacturing, and it is also about most important parameter nowadays is electronic manufacturing, where we are importing a lot. So it's not like to say that it's today's thing. So in certain sectors, it has been for decades, and it is progressing. It has progressed really very well, as you can see in the pharmaceutical tablet manufacturing or in some chemicals as well. As far as some segments are concerned, yes, we have been behind, partly due to some of these China probably manufactured at such a scale that to match their cost at lesser scale was a difficult task. But now what is changing is, as I highlighted earlier, that because of multiple geopolitical issues, everyone is trying to augment their supply chains. So in the supply chain, if there is only one country who is supplying or only two, then people want a diversification. Actually, the thought is going to the extent that whether that manufacturing should be done in those countries as well. But again, it's not practically possible, but thoughts are there definitely. So these things are helping. That supply chain augmentation which is happening worldwide is definitely helping India, especially that now we are in the radar of everyone. Whether they should set up a plant here. And most of them are doing, because India in itself is a large market as well. Because to manufacture anything in any particular geography, the local big market is first and foremost important criteria. So in case of China, again, they are around 120 crore people. And that is one of the lucrative element which was there. In India also, we have 140 crore people, and the wealth is increasing and the demand for various goods. And that's where, when it comes to auto, then auto we have been manufacturing in India, and now we are manufacturing, and multiple MNCs are manufacturing their SUVs or high-end SUVs in India. So the consumption of those items increases, it gets manufactured. When it comes to electronics, we are largest consumption of electronics item, but it is not getting manufactured because China has been, and Taiwan has been traditionally much more competitive than us because of the first mover advantage what they had. While now we are trying to catch up on that, we are trying to get into some of these segments. Though it will be, so for the segments of manufacturing, we are starting relatively late or now. There that J curve will happen after some time, and you will see the after initial hiccups, we will pick up there. While in some of the segments like pharmaceuticals, textiles, it's we are doing very well. So I would not say it is a sudden thing in In certain segments, it's a combination of geopolitical requirement of supply chain augmentation. It is a combination of our requirement to reduce our dependence on import, and these are the key aspects of it.
One thing I would like to know, when there is a resurgence of manufacturing which is happening in India due to the factors what you mentioned now, is it directed towards certain objectives to be achieved? Let's say, is it geared towards import substitution or meant for augmenting exports, or is it for consumption of ever-growing local population here? Which side it is tilted, or is it a universal growth which you are seeing in the manufacturing sector?
The first and third part which you spoke about, which is consumption and import substitution. So that is definitely one of the important parts. So when it comes to, I just start with, say, electronic items. Now, electronic India, so when it comes to electronic import to export ratio of India, it used to be around 6 earlier, a decade ago, somewhere in 2014. Now, with our push towards manufacturing in India, though our value add may not be that high, but now the electronic import ratio has fallen to almost 3 because of the focus. So then why this focus was there? Because we are large consumer of electronic item, then why we should not manufacture in India? So it helps both address the balance of payment issue. It also help addressing the local employment part of it. And that's where the local market, along with focus on the import substitution to address currency depreciation issue. The both of these, and along with that employment, it all are interlinked in a manner. And that's where imports has been one of the reduction of import has been one of the important criteria. And this is the segment where you are finding newer industries. So I was talking about some of the manufacturing sectors we are already arrived, or we are already doing very well. But here, this industry is relatively new. So because why we were importing was the industry was not there. And now we are inviting and progressing well on this path. The second segment, which is about exports. Now, exports are happening especially, or I would say the high value add exports. So in electronics today, probably value addition may not be very high. But now in other segments of exports like cable wire, electronics, industrial products, chemical, pharmaceutical, these are the industry which are more export oriented because it is there in India for decades. And we have expertise. We have expert promoters, we have expert managers, we have expert workers in this. And that's where, just to give an example, that in this journey of China plus one, there is one data point wherein share of US import from India, which used to be 1.8% almost a decade ago, which is now increased to almost 3%. And this jump is mostly happened in last 5 to 6 years. So that's where this export-oriented part, which I'm talking about. And this is happening in the industries which has been traditionally there in India, but it got a fillip more because of the geopolitical issues, as well as the issues. Those countries are also having some issues on their manufacturing front because of the energy cost and labor cost, etc. So it is this is where the export part of the segment is working. Now, just to talk about consumption in a different way. So one, I talked about electronic consumption. Now, if you look at the consumption of, say, SUVs or high-end cars. So earlier, India used to be a small car market. And now in that small car market, the requirement was less, the features used to be low, and that's where the manufacturing was there, but not entire manufacturing was not captured by all the companies. Now with SUV demand growing, now you are seeing many more parts out there. So that those incremental parts are getting manufactured in India. Along with that, the growth is high, and that's where many MNCs are setting up plant here, and they are considering India as a hub to export in the Asian market or African market. So again, this industry where we have expertise and we have local consumption, and the growth can be backed by the local consumption, or the investment decision is backed by the local consumption of, or changing consumption patterns from, say, low price point cars to the high price point SUV. So all these three factors are working in a manner.
Now we get to hear a lot of noise around manufacturing. You see a lot of headlines. I understand that the expertise which was there in India will gear up to make best use of this push which is happening in the manufacturing sector. Other than the local talent, is there anything new which has happened in the last 10 years? A new industry coming in, new technology, new product, something which is not there in India. What exactly is happening? Or it's just an intention and this is a political hype and sloganeering which is happening? Is there a concrete evidence you have seen on the ground? What examples you have to share with my audience?
Sure. So, a few of the examples, or a few of the data points. So, first to start with some of the data points from the unlisted space. So, what we have observed is one of the data points. So, in 2015, out of new industries which used to get registered in India, 21% used to be in manufacturing, and 74% used to be in services, because most of the companies, as you highlighted earlier, services is where we taken a big jump. But this scenario is changing. Now, in 2018 as well, it was the same number. 75% companies which are getting registered are from services sector, while 22% from manufacturing sector. Now, fast forward to 2022, and there we observed that in the companies which are getting registered in manufacturing sector has increased to 28% from 22%. And in services, obviously, it has fallen from 75% to 64%. So this is one of the data point where yes, more and more companies are. The FDI is definitely considering manufacturing in India, and that's where that is also being observed. One more data point is also about export. Again, that export is also linked to the services export. It's not only about manufacturing export. But one data point was that Indian exports actually surged in the first decade of the century, from FY3 to FY12, from $53 billion to $306 billion. And it remained flat at around $300 billion for last entire decade. And now from that, it has gone up to almost $450 billion. Now, this surge is not entirely because of services. The manufacturing is also contributing to it, because India's share in global merchandise export which was around 1.7% over last entire decade. It has gone now up to 1.9%. So for this jump looks very small, but in the context of our last entire decade, it was 1.7. And from that 1.7, now we are seeing 1.9. Apart from that, if we want to look at anecdotal examples, then there are multiple companies in multiple sectors which are investing in India. So there are, and mostly unlisted. So if you see General Electric, Micron, Hyundai, Carrier, Vivo, there are multiple Mondelez, right from that ABB, Schaeffler, and multiple companies in both listed and unlisted space. They are setting up in India, and this is across sectors. So the sectors are also varied, right from industrial, semiconductor, electronics, even footwear. Because as you may be aware that in India, the expensive shoes actually are mostly imported, right? So even the footwear industry is considering more and more and manufacturing of high-end shoes in India. So there are such multiple data points around here. And now if you now especially look at the listed space, and then in listed space also in the companies, there has been the capex is being done by some of the capital goods industry companies to export from India. That was visible in last 3-4 years. My chemical company's story, you must have already seen that yes, chemical industry is growing, they are doing capex, and their realization has improved, their manufacturing market share is increasing. It is a different fact of the matter is it is being commodity end of the day. It is going through some trouble now. But when it comes to demand for manufacturing in India, that industry is seeing a huge demand even now. And when it comes to electronic manufacturing services, already there are multiple companies which are there. And that's where one of the data points where I highlighted that already electronics import to export ratio has declined already in last 3 to 4 years. Again, it may not be very high value add, but then it's the beginning. Because obviously when you start with the low value add and then you move up the value chain. So that journey is also there.
Very interesting points you brought up. See, our audience has been NRIs. The biggest problem for NRIs is what happens to rupee-dollar equation. Can you take us through how does this resurgence of manufacturing sector in India will affect the rupee dollar equations or the current account balance. How does it play out? Say tomorrow you go through a manufacturing route here and you constantly keep importing. Will it worsen the situation of current account deficit? Will it be favorable? From the developments, what you are seeing, what might pan out? How this might affect the rupee dollar equation?
So, India we don't have many natural resources because most of the countries where natural resources are there, at least if they are self-sufficient, even if they are not exporting, the lot of burden on the balance of payment and the local currency is eased. So we don't have that liberty, and that's where we are dependent on imports when it comes to energy as such. So especially the crude oil. Now, along with that, actually the dependence on import was also increasing on the electronics item and many other items. This also had started to increase pressure on currency as well as balance of payment. These all three things interlinked because of manufacturing. At least, see now that as far as natural resources are concerned, definitely we can't do anything about it. At the most, one can say shift towards the solar and wind power and try to reduce the dependence on crude and power-driven EVs, and that's how it is. But net, even if you remove fuel for many other items like plastics and all, you need anyway crude oil. So it's not that you can just do away with the energy import dependence. But when it comes to the manufacturing sector, definitely we have that lever to play. And that's where rightly that lever is being played by the government in last 10 years, right? From the policy announcements to infrastructure development. And because of that, more and more manufacturing is expected to be in India, and that would definitely ease pressure on balance of payment and rupee dollar equation. So along with service sector export, if manufacturing sector export also adds to it, then definitely it would be good news for both BOP and rupee.
So NRIs can boldly invest, thinking that this push will reduce pressure on rupee, and probably they stand to make good amount of profits in dollar terms because of this push. One thing the investors are always worried about is that, see, something will start as an idea, develop, and by the time it is in the news, the trend is almost it's getting over, and they join the rally at a later point of time. When it comes to question of manufacturing sector growth, if somebody wants to join the bandwagon now, the doubt that he carries in his mind is how long this rally will run. Is it meant for few years, or can I go and invest right now? It can develop into a multi-decadal theme, and as long as India is growing well and the manufacturing sector has a massive manufacturing, there is a good chance that the investor can make money for a longer period of time. How long this might last?
So every such move, it starts with multiple things. So if we just look at services sector, so services sector, probably there was also government support at that time by way of tax concessions at the initial part of the services sector. And then there was definitely India advantage of English speaking, engineering talent, etc. And then we have seen what we have achieved there. And most importantly, you have seen a lot of entrepreneurship in service sector. There used to be hundreds of companies, new companies, startups. Not now, even then in 2000 and all, when all things started, wherein multiple entrepreneurs entered into it and made it a success. Probably service sector, as far as startup is concerned, it probably is relatively easier, and that's where you're seeing many more entrepreneurs getting into it and making it success. Now, when it comes to manufacturing, now here, as I said, the land, labor, capital are important parts compared to the services, where in services only labor is the important. While land is important, but it is manageable. It's not huge land you require, and capital also not requirement very much. So if I just try to assess on this count, so, and we just go one by one with various policy initiatives on infrastructure development, and because of which the land availability, because the more infrastructure development, the more you go into hinterland, and the more land is available actually. for manufacturing. So that part is getting addressed, and that journey is on everywhere. It is getting reflected by way of building of new roads, ports, railway infrastructure, industrial development corridors, and so on. So that journey is on, which eases land. Secondly, when it comes to labor as such, I'll always say that in services sector, wherein we have done such a wonder, then definitely in manufacturing sector, I don't see any reason why we would not. Because in manufacturing sector, it's about labor. It's also about machines, right? And in that context, the labor quality and with the labor quality, what we would have, and what we have done in other manufacturing industry, definitely the labor would not be issue for India as such. And as far as capital is concerned, again, many investors are ready to invest in India, many private equity players and many promoters are now coming ahead and trying to invest in the newer industries. So you must have seen the large groups of India or the large promoters of India. They have actually in about of their incremental capex or big announcements are concerned. Actually, they are not in the traditional industries. They are actually in this new manufacturing segment as well. May it be renewable power, or it can be in EMS or battery or the EVs and so on. So every promoter is also doing it. While to get a J curve like services, as I said, the entrepreneurship in services is because of the land, labor, and capital, there is relatively easier versus in manufacturing. So in manufacturing, we have to see that how many more the new entrepreneurs enter into it and what pace. Because in services, that pace was relative to manufacturing, it was easier to match. While in manufacturing, that pace of new entrepreneurs coming in this segment will not be as easy. While we speak, we all already seen that in EV new entrepreneurs got into, and many segments, smaller and new entrepreneurs are getting into. So with the old and new entrepreneurs, so actually it is more to do with now the entrepreneurship of India, where this sector will go to the next level.
See, when we hear the noise on manufacturing sector, long-term players, the advisors or the investors get a memory of 2007-8. In 2007-8, a similar story was panning out. If not on the manufacturing sector, it was on the infrastructure. So every company was coming out with an NFO, and every rating agency was giving all kinds of stars for these funds. And finally, what happened was, because of the execution risk, the entire thing fizzled out and the investors were left high and dry, and their funds have to remain below sea level for a long period of time. When it comes to question of manufacturing sector, are there any key challenges which investors have to keep in mind before they put money into manufacturing sector in India? Are there key challenges? See, I understand that the Indian entrepreneurs are geared to go this way. The capital is available, FDI is flowing. What could be other challenges? Are there political risks? Are there shortage of skill? Are there anything else which can derail this entire journey of scaling up of manufacturing sector in India?
Since we compared with the infrastructure in 2007-8, so just 2-3 points on that, along with what may derail. Actually, more than derail, what I can say is what compared to potential, where we need to work out so that we can deliver on potential. So with availability of land, labor, capital, and intent, though there are many companies which are, or many entrepreneurs which are there. So actually some entrepreneurs which are there already in, say, auto ancillary segment, they can get into EMS or any other segment because it's about manufacturing, right? And anyway, it is new in India with tie-ups and etc. they can do. But it is, when it comes to some of these industries, the scale required is huge. It is actually multifold of what they are doing currently. And whether you have an ability to actually do it at that scale, the employment, the land, as well as taking, and that too in the short period of time. Actually, I would say that would be the bigger challenge, that how many of the entrepreneurs would be ready to just triple their manpower, land, plant capacity, as well as management of people in just 3 to 4 years. For that kind of J-curve to come, wherein the services industry at a point in time used to grow at 50% and all. For that to happen, this kind of ability to suddenly multiply your scale is what is actually may not result in very, very fast growth. And that's where the manufacturing will not growth is difficult to assume that it will be as good as services sector growth. Secondly, on what can derail, and if we now try to compare it with 2007, so actually that time it was more so about infrastructure. So infrastructure projects as such are relatively long gestation projects. So when as an investor, now coming back to, because for all of us what is important is as an investor what matters. So what as an investor what matters is whenever you're choosing any company or industry, what is the gestation period of the investment. If gestation period is too high, free cash flow generation, profitability requirement are too long and too back-ended. So in infrastructure project, inherently, it is very, very back-ended. And that's where the judgment went wrong at that time. While in manufacturing sector, whenever investors are investing in any company or in a segment, then that turnaround, if it is too back-ended, then one need to be careful. Turnaround in terms of profitability. So what, as an investor, we are also looking into when we have this manufacturing fund, which we launched recently, when we are investing. Then any company which have a promise of delivering profitability in 5 year, 10 year down the line, then obviously one need to be measured in your approach in such companies. While if the profitability is front loaded, that with all these good things, if profitability is there initially and ROCs are reasonable over next 3 years at least, or 3 to 5 years at the most, then we have to focus on those matrices. Otherwise, if it is a really long gestation, then it becomes a trouble.
So all in all, people have to be careful. It is just not, don't go with the noise or the headlines news there. Do your due diligence, look at your risk profile, consult your advisors, make an informed decision. Don't just follow like a herd into this particular story. It has its positives, but as investors, you also need to be looking at this like any other investment, evaluate it from all angles. Well, if my audience decides tomorrow to invest in India's manufacturing sector, how can they make best use of opportunity? Are there dedicated funds which invest only into the manufacturing sector? You at Axis Mutual Fund, do you have any specific opportunities around that?
Yes, so at Axis, we have launched Axis India Manufacturing Fund a month ago. And the way I would look at is the manufacturing. Actually, that's what I would suggest investor to do is one should look at it as a complementary portfolio. One should not look at it as the only thing in India. So if you notice, if you are existing large cap oriented investments, generally large cap oriented investments are tilted towards consumption part of economy. And generally in a portfolio, if you have large cap exposure more, then because of its tilt towards consumption oriented economy through financial services, FMCG and retail, etc., you have generally relatively high exposure to the consumption part of the economy. While if we go by the underlying benchmark, just purely underlying benchmark of the manufacturing fund, then this benchmark tend to be more complementary to the large cap benchmark. And that's where these funds are to be considered. And I would urge to people to look at it as a complementary rather than getting into a themes which is great as such. It is more a complementary portfolio to large cap oriented portfolio. Because if we see India, if there is a Nifty India manufacturing index and it has exposure to sectors like its constituents are actually auto component, capital good, healthcare, metal mining, chemical, oil and gas, consumer durable and textile and so on. Then there are small sectors. So this exposure to this sector, and if you now just compare it with say Nifty 50, then the exposure of these sectors in Nifty 50 is about 25 to 30%. So that's where I'm talking about the complementarity. So because the large cap indices are more geared towards financial services and IT and such things, so that's where it is more consumption and services oriented, while this gives a good complementarity to your portfolio.
So thank you, Shreyas, for all these inputs. I think you have given a 360-degree perspective on what's happening in India's manufacturing sectors, what people should get attracted to, what care people should exercise while they have to invest in India's manufacturing sector. The message for our NRI community is that it's a silver lining for those of you who want to invest in India. If this manufacturing sector takes off like the way Shreyas has briefed in this particular video, it would be positive for rupee dollar equation, which means to say rupee might not depreciate like the way it used to depreciate before. So it could be a good opportunity for you to invest in India without the fear of excessive rupee devaluation, what you have seen in the past years. Thank you very much for all these inputs. We remain in gratitude to you, NRI Money Clinic and its audience, for your kindness to spare your time and share these thoughts with my audience. Thank you very much, sir.
Thank you very much.
Dear viewers, hope the conversation I had with fund manager Shreyas Devalkar gave you a lot of insights into the Indian manufacturing sectors and the opportunities around that. If it did give you all the points that you are looking for, don't forget to give me a thumbs up. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit that subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Tuesday with yet another expert, with yet another topic. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.